The Nasdaq 100 reversed sharply off its highs on Monday, forming an inverse hammer candlestick to start the week. Apple outperformed, following broker upgrades, whilst Tesla also rose after CEO Elon Musk endorsed Donald Trump over the weekend after an attempted assassination on the former president. The reason for this is that analysts believe a Trump win in November can help Tesla, as his proposed tariffs on Chinese imports should help Tesla maintain its dominant share in the US electric vehicle market. Fed Chair Powell also hinted on Monday that the Fed would not wait until inflation hit their 2% goal before lowering rates. The Nasdaq 100 was an underperformer on Tuesday, whilst the Dow Jones rallied. The rotation out of tech stocks continued, with traders now pricing in a 100% chance of a rate cut in September. A rate cut is seen as boosting small caps and industrials more reliant on borrowing costs than cash-rich mega-cap technology stocks. You can really see it from this chart, which shows the Russell 2000, which is an index full of small caps, rising 11% over the past week, whilst the Nasdaq 100 is down over the same period. This was the snapshot from Tuesday. Fast forward to today, being the last trading day of the week, and you can see the gap is still wide in performance between the small caps and the mega cap tech index. That has been the story of the week. If you look at this chart from Goldman's, it highlights a 5-day spread between the Nasdaq 100 and the Russell 2000, which shows a pretty historic move relative to 20 plus years of data, only matched by 2001 and 2001 era. Now the rotation really accelerated on Wednesday, with chip makers in particular falling sharply, on reports that the Biden administration is considering wide-sweeping rule changes to clamp down on companies exporting their critical chip-making equipment to China. Price was saved by the 40-day on Wednesday, whilst price remained just above it on Thursday and its upper trend line in red, which price briefly breached intraday before recovering. Today, however, we're seeing a breakdown of the upper trend line. This is a key break and will likely take price towards the lower blue trend line around 19,325. With the tech outage today causing multiple issues around the globe, it will have added to the sentiment shift we've seen this week. Having said that, we've only recently made a new all-time high, so price coming off here could just be profit taking. In terms of levels to watch on the Nasdaq 100 into next week, support is the blue trend line around 19,325, followed by 18,800. Resistance meanwhile will be the upper trend line in red around 19,780. Next week we have more mega cap tech earnings, which will influence the Nasdaq 100, with Tesla and Alphabet reporting. More economic data with Q2 US GDP on Thursday and the Fed's preferred inflation measure PCE on Friday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.